Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. I'm so grateful and excited to be with you here this morning as we dive right into the last trading day of the week. Happy Friday to everyone in the house, and let's get this party started. So, before we kickstart the session, let's quickly confirm that we are all good to go here, that we're all on the same page. So, if you can see my screen and you can hear my voice clearly, type in hi in the comment section and let's get a positive feedback that we are good to go this morning. So I would like to see some feedback, please. So if you can see my screen and you can hear my voice clearly, let me know in the comment section. So I will hold on a little bit to check the comment section and see if we can hear me and can see my screen. All right. So I can see some couple of comments here. 60765. Thank you very much. 423. Good morning. 7014. Robin. Good morning to you. Thank you very much. 9956 says hello to everyone. Good morning. Hey Carrie, how are you doing today? Good morning and thanks for the support behind the scenes. All right, so I think with this handful of feedbacks, I will see this as a positive response that we are all good to go this morning. So on this note, I welcome you all to yet another promising session on the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market using simple technical parameters such as key levels, trend lines, and of course, chart patterns to uncover valuable insight into the historical price movement of all of the financial assets on our watch list for the week. And in fact, since the beginning of the week, we have been doing pretty well as we have 4 financial assets that we have been monitoring, which includes the USOILSPOT, the USTech100, which is popularly known as the NASDAQ. Then we have the GBPUSD and of course the XAUUSD, popularly known as the gold spot. And in fact, on all of this asset, we have been very profitable, though we had some couple of losses, but we were able to recoup these losses and build a profitable momentum on top of it. And for everyone who has been part of this profitable journey so far this week, kudos to you. Well done to you for being on standby and patient enough to wait for setups to mature before jumping into any of these positions. And for those who are joining us for the first time, you are highly welcome on board. Well, for your sake, let me run through what we do here. We come together here as a community in anticipation of the New York trading session, where we try to review our current, if we do have any position, review it and try to see how we can manage it, at the same time strategically position ourselves ahead of the New York session on a daily basis. So it happens 10 a.m. UTC, 11 a.m. West African time. So today being the last trading day of the week, it's a very, very important day. And in addition to the fact that today is the last trading day of the week, we are also looking forward to a high impact event coming in from the US economic docket, which makes this a very important event for us all. Today being the last trading day of the week, there is always this psychological expectations that majority of the key players, even majority participants in the market, will want to be closing in on their position, especially after taking advantage of a significant move ahead of the weekend, which of course would reflect on the chart as price action going through a reversal setup. So we are going to be taking all this expectation into consideration while we look out for trading opportunities ahead of today. So with that being said here, let's dive right into the business for today. And as usual, the first thing we are going to be doing is to check on the economic calendar. And as by now, for those who have been with us for a while, will know now that these fundamental factors often manifest on the charts in technical patterns and, of course, price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, helping us in better timing and at the same time position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. So here we are on the economic calendar, and in fact, yesterday was jam-packed with a handful of high impact events from the United Kingdom economy, which one of the major one was the interest rate decision, which came in just as expected, as we had a 25 basis point rate hike on that one. And we are going to be looking at how the pound sterling has reacted to that event. As you will know that, I'm sorry about that, Queen. By now you will know that though we had some traction on the pound sterling, but it appears that the market is not moving as expected, especially after that interest rate hike that we witnessed. So we are going to be looking at how we are going to be positioning ourselves ahead of that of today. Then yesterday as well, we saw the ISM Services PMI coming in from the United States economic docket, though it came a little bit below expectation at 52.7, giving us a negative deviation of minus 0.15, which of course is not something that good for the economy, but it's still above the 50 mark, which is considered to be quite okay. And of course, we saw how the market reacted. The dollar had remained range bound throughout the last 24 hours, and I'm of the opinion this could be as a result of market participants' expectation of the NFP data coming up today, as everyone is looking for clues on where price action is likely going to be going. Now, for today, Friday, August 4, we have two high impact events, both coming in from the United States economic docket. Now, the first one here is coming up in about an hour, 30 minutes from now, and that is the average hourly earnings, both for the month-on-month and then for the year-on-year for the month of July. And both data here, we have a previous data of 0.4 and 4.4 respectively, but the general expectations for today are quite lower than the previous data, which of course is a sign that we might majority are thinking that there's been a contraction in the labor market. So we are going to be looking forward to that one too. And this is released by the US Bureau of Labor Statistics, and it's a significant indicator of the labor cost inflation and of the tightness of the labor market. So a higher reading, of course, will give us a positive signal for the US dollar. Then the major one today is the non-farm payroll, which is released by the US Bureau of Labor Statistics as well. And this presents the number of new jobs created during the previous month in all non-agricultural businesses. Now, generally speaking, a high reading is seen as positive, of course, and a low reading is seen as negative. Now, if we look at the previous data here, we have 209,000, and we have economics projecting 2,000 for the month of July. 200,000 for the month of July. So we are going to be looking forward to what the actual data is also going to be like. Will it be just expected, below expectation, or even beyond expectation? So as technical traders here, what we are simply going to be doing is to try to sniff the current market structure to identify potential trading setup using simple parameters such as trend lines, key level, and of course chart patterns to identify and position ourselves ahead of that big move we are looking for. So with that being said here, let's dive right into the business. And the first financial asset we are going to be taking this morning is of course the US oil spot. Now the US oil spot has been considerably one of the most profitable trade for us since the beginning of this week, as we have a situation where we have bought, we have sold, and we have bought again, hereby giving us significant amounts of profit. So before we kickstart, I would like to run through how the week started for us so we can have the background knowledge of what went on during the week and how we have been able to position ourselves for those big moves. So at the beginning of the week, remember we had our key level, which was the benchmark for us at the $80 mark, and we saw our price action was initially, let me zoom things in a little bit so that you can see things clearly. So we saw how price was initially confined within the $80.20 level and of course the $79.93 area to give us an insight into the level of indecision at that particular point in time. And you know how we do it in this community. When price action falls into such a range, we want to wait patiently for either a breakout of the resistance line for an opportunity to buy or the breakdown of the support line for an opportunity to sell. Now with orders placed at both ends, we had our buy stop order triggered, giving us our first buy position for the week. And remember, we were able to maximize the potential of that bullish move by adding more positions as price action continues to find higher highs, breaking out levels such as the $80.50 level. We also had the breakout of the $81 level, which also gave us more opportunities to buy. Then we also had the breakout of the $81.40 level, and finally the breakout of the $81.75 level, all giving us buying positions to capitalize on. So it has been quite a wonderful and profitable, in fact, first half of the week for us all. Then on Tuesday's trading session, we acknowledge our price action was finding lower highs after testing that new high at the $82.15 level. And as a result of this perspective, we were able to connect the series of lower highs, giving us this descending trend line, which we said we were going to be using to guide our trading activity on that day. And we said to join an uptrend continuation, we would need price to break out, retest that structure to capitalize on an uptrend move. However, we said that if price drops and continue to stay below the descending trend line, then a breakdown of the $81.40 level will be an opportunity for us to sell. And in fact, a couple of hours into the New York session that day, we capitalized on that move, and price action moved all the way to the downside, giving us multiple entries to capitalize on. Now, during our live session yesterday, we were able to spot a simple setup that we said we will be using to guide our trading activity. Now, this was where we were during the live session yesterday. We were around here where price action was trading below that descending trend line there. And we anticipated that if price action does break out and retest that trend line, we shall be joining a bullish move. And this was exactly what happened. As you will see, we had a breakout retest on our lower time frame to give us another opportunity to buy. And if you recall vividly what we said here, we were able to identify very important levels that we said we were going to be using to capitalize on that move. As a breakout of that structure, we'll be welcoming more opportunities. So we had the breakout of the $80 level, giving us more opportunities to buy, $80.50 level, $81 area, and of course we have the $81.75 level, which all has given us multiple entries to capitalize on that move. So at this point in time, you should be having a minimum of 1, 2, 3, 4, and 5 positions running in profit at this point in time. So well done to everyone who have been able to capitalize on this move, as if you are taking advantage of this position, of these opportunities, you should be currently running with a minimum of 500 pips in profit on the US All Spot. So it has been quite a wonderful and profitable week for everyone in this community. So well done to everyone. Congrats to you if you are taking advantage of this opportunity. So right now that we are going into the New York session, what is going to be our plans? And that reminds me, you know how we do it. Whenever price action moves significantly well in our favor, the next thing we want to be doing right now is to move all our stop losses on all this buy position to secure this move that we are currently enjoying at this point in time. And from the look of things right now, I'm of the opinion that the most appropriate area or zone to move all stop losses to is between the $80.50 level and of course the $81.30 area. You know, we want to give enough room for price action to breathe. So now, with a well secured position at this point, how do we intend to capitalize on more opportunities in this market? Is it going to be an uptrend continuation for us today? Or are we going to be seeing a situation where, because of the last trading day of the week, we could be seeing some profit-taking activities, which could reflect on the chart as a huge sell-off in this market? So let's dive into the current structure and see what is going on here. Now, if you look at the current structure, the current level where price action just broke out of, which is the $81.75 level, you will see that since the beginning of the week, this area has been a significant level for selling pressure. Look at what happened here on Monday. We saw selling pressure as soon as price action got into that level. Then on Tuesday, we saw the breakout of that structure, but immediately we saw price drop below the $81.75 level, giving us another sell position. Now, if we go fast forward to the early hours of today, we saw selling pressure around this area. Now we saw price break out of this level in the last couple of hours. Now, the question here is this going to be a false breakout or a true breakout? So our analysis today is going to revolve around deciphering if it is truly a true breakout or a false breakout. Now, it just shows us now that our center of focus is going to basically be above the $81.75 area. So at this point in time, price just broke out of the $81.75 level, and as long as price remains above that area, we shall feel comfortable in our buy position. And in fact, while trying to decipher where price action will go this morning, I was able to identify an ascending trend line that we are going to be using to guide our trading activity for today. And this was identified after connecting the series of higher lows here. So what this simply means is that as long as price action remains above this ascending trend line, we shall feel comfortable in our buy positions. So ensure that any stop losses you have should be just right below this ascending trend line as we continue to monitor price action and look out for more opportunities, more patterns and structures that will support the idea of buying the US All Spot. Now, with this structure here, let us look at the highest point where price action has been for this week, and that is the $82.15 level, an area we are also going to be looking out for more opportunities to capitalize on this uptrend continuation. And that reminds me, today is the OPEC Plus meeting, I think, and majority in the market will be looking forward to what the outcome of that meeting is going to be. But everyone is thinking there's going to be more oil cuts, which of course is as a result of trying to artificially increase the demand for the oil prices in the market. So that is how we are going to be buying the US oil spot for today. So anything above this ascending trend line is good for us to buy the US oil spot. Now, in as much as we're looking out for buying opportunities here, remember how how we do it in this community. We always want to take into consideration the potentials of the sellers too as well. Now, in this kind of scenario, what is it that will make us want to change our bias from bullish to bearish? Now, like I said earlier, we were asking if the breakout of the $81.75 level is truly a breakout or a false breakout. Now, the only thing that will make this a false breakout is if price will drop back below the $81.75 level and we begin to see signs that buyers are finding it difficult to climb back above the $81.75 level. And if this happens, then at this point we will start considering selling, and we might likely be seeing a sell-off in this market. And one of the signs that will make us start thinking of a momentum shift is when we start seeing multiple rejection of the $81.75 level, leading to the breakdown of that ascending trend line. And then if this happens, then at this point we want to be getting ready for a momentum shift. So a breakdown of that trend line, retest of structure on our lower time frame will give us more opportunity to sell, while if price continues to drop, breaking down key levels such as the $81.30, the $81 MAC area, all these levels will be areas we shall be looking out for more selling opportunities to capitalize on that bearish move to the downside. So this is how we are going to be managing our position for today. So a quick recap: anywhere above the ascending trend line and the $81.75 level seems most appropriate for us to feel comfortable in our buy positions. And if price action does break down the $81.75 level, followed by continued selling pressure leading to the breakdown of that ascending trend line, then at this point we will start considering a potential momentum shift. So this is how we are going to be managing our positions on the US oil spot for today. So if you do have any questions whatsoever as regards to this explanation I just made, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. And you can as well take that time out to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset. I see your comments, Susie MB, 17196422. Thank you very much for checking in. So the next asset on our watch list for today is the USTech100, which is popularly known as the NASDAQ 100. Now, it has been quite an interesting week for us on the USTech 100 too as well. As you will see, we've had a situation where we have been selling actually since the beginning of the week. We initially had a buy position first of all, but the fact that price action did break down that support line, remember, at the beginning of the week, we had this situation where price action was ranging between the 15,810 and the $15,690 area to give us an insight into the level of indecision at that particular point in time. And when we have a range like this, when price breaks down the support line, it will be a signal that we are going to be going bearish. And in fact, we saw what we saw here on Tuesday. We saw the breakdown, retest of the support line, which triggered our sell position. And since that moment, we have been selling, adding more precision at the breakdown of key levels, such as the 15,600, which was, of course, broken and retested, as you will see there. We also had the breakdown of the 15,520 as we rode that move all the way to the downside. Then during our live session yesterday, we begin to notice that buy pressure resumed around this area. So we saw price drop to the lowest point for the week, which was at the 15,250, and this was where we were during the live session yesterday. So I told us all yesterday that if price action finds it difficult to break down the 15,250, then we might likely be seeing a higher low that will lead into a bullish momentum. So to anticipate this, I told us all that all our sell positions should be well secured while we wait for a breakout retest of the 15,390 to capitalize on an uptrend move. Remember, this old zone here is within that descending trend line that has been supporting that bearish momentum since the beginning of the week. And I told us all that if any of this trend line is broken to the upside, there is a high chance that we will be witnessing an uptrend situation here. And if you are taking advantage of that move at the breakout retest of the 15,390, currently you should be having a minimum of about 47 pips in profit. For those who took advantage of this move, well done to you for being on standby to catch this move. So at this point in time, I will be suggesting that you should move all stop losses to the entry point, as we want to, it's very likely that things might change from this area. Now that we are going into the New York session today with a well-secured position in hand, how do we intend to capitalize on a potential uptrend? Or if price will be going to the downside, what do we want to see that will make us want to start considering selling? Well, while I was trying to dissect the current market structure this morning, I was able to identify a simple setup that we are going to be using to guide our trading activity for today. But before we go into the simple setup, let's run through the higher time frame quickly to see what is really going on from an holistic perspective. Of course, we need to see how the market is playing out from a bird's eye perspective. So in order to do this, let's scale up into the 4 hours time frame. Now on the 4 hours time frame, this is what we were able to spot at the beginning of the week. Remember, we acknowledged the fact that price action has been very, very bullish, and to emphasize that, we had a trend line after connecting the series of higher lows. And of course, this trend line has been a major determinant of price action this week, as we saw price action break down that ascending trend line for the first time in the last couple of months. Now, with the breakdown of that ascending trend line, it's a technical expectation that whenever price action breaks out of a key structure such as this ascending trend line, there is a likelihood that price will come back to retest that structure in anticipation of a downtrend continuation. Now, with the way things are going right here in the last couple of days, noticing buy pressure after price tested the 15,250, is it likely that a counter trend opportunity that will bring price into this ascending trend line will come at any point in time to incite a downtrend continuation. And if that is going to be the case, how do we capitalize on being part of that move into that area? As if you look at it closely, you could see we have a potential of about 300 pips to catch here if price does climb to the upside. Then another thing we will also consider here is if price falls back below that descending trend line, we can be looking out for more selling opportunities in this market. So now to capitalize on this potential trading opportunity, we shall be scaling down back into the 1 hour time frame to see how the market is reacting to this current zone. Now, when we scale down into the 1 hour time frame, this is what I was able to spot here this morning. The first thing I saw here was this ascending trend line. Of course, in the last 24 hours, price action has been finding higher lows. And when we start seeing higher lows, it's a clear sign that a momentum to the upside is gradually building up behind the scenes. So when we connected a series of higher lows here, we have a beautiful ascending trend line, which we are going to be using to guide our trading activity for today. And what this simply means is that as long as price action remains above this ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more opportunities to capitalize on this uptrend continuation. And the only criteria or condition that will make us want to consider selling is if price will break down this ascending trend line. So the only condition for us to sell at this juncture is for price to break down that ascending trend line. And in fact, if price action breaks down that ascending trend line, we will be back in the seller's territory. Remember, we have this descending trend line which has been supporting our selling ideas since the beginning of the week. So a breakdown of the descending trend line will welcome the selling opportunities here. So let's see how the market will react to this ascending trend line. A breakdown, like I said, will welcome selling opportunities. So we shall be looking out for selling opportunities below the 15,390 area. But if price action continues to find higher highs, then a breakout of the 15,520 will be an opportunity to add more positions, while a further breakout of the 15,600 and the 15,690 will welcome more buying opportunities in this particular market. So let's see how the market will react to that ascending trend line in the next couple of hours, and depending on what happens here will determine what our next line of action will be. So you want to be marking out those levels on your chart, as you will need them as a reference point to guide your trading activities for today. So if you have any questions whatsoever as regards to this current market setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point for today's trading session. All right, so in the absence of no questions, so I just assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. Excuse me. So the next instrument on our watch list for today is the GBPUSD. Now, on the GBPUSD, it has been an interesting week for us too as well on this commodity. on these assets, as we have been selling despite the fact that price was sitting above an accumulation zone at the beginning of the week. We know, remember, we had a couple of stop losses hit where we had a loss on the first buy positions we had, but thank goodness we were able to recoup on the loss and build on the on that to make more profits on this GBPUSD. So I will quickly share with you what things are looking like on the 4 hours time frame so that we can have a background knowledge on why we've actually bought at the beginning of the week and why we have been selling at this particular point in time. Now, let's scale back up into the 4 hours time frame here. I need to show you something here, especially for those who had missed out on our early sessions for the week. Now, at the beginning of the week, we had our key level situated at the 1.28500 level, which of course was what we were going to be using to guide our trading activity for this week. And you know how we do it whenever we have key levels such as this. We want to be buying if price action remains above the key level, and we want to be looking out for patterns to sell if price remains below the key level. And coupled with the key level was this accumulation zone here, which was spotted, which lasted for about 3 to 4 weeks in this market. As you will see, that whenever price action gets into the zone, we saw how sellers have been struggling, as buyers would always take over the market as soon as price action got into the structure. So you saw what has been going on here in the last 3 to 4 weeks, and as a result of the situation, this led into the idea that we want to be buying this the pound sterling at the beginning of the week. So I will go back down to the 1 hour time frame. I just needed us to see what things were looking like on the higher time frame so that we can all be on the same page when I start expatiating on the structure on the lower time frame. So this is where we were at the beginning of the week. So we saw this range here where price action was initially confined within the 1.286 and the 1.2845 to give us an insight into the level of indecision at that point. Now, coupled with the fact that price was above our accumulation zone, we said here that we are going to be having a buy stop order above the 1.286, which of course was triggered, but unfortunately we were taken out of that position in a loss. And since then, we saw how selling pressure resumed in this market, leading to the breakdown of that support line at the 1.28450 level to trigger our first sell position for the week. And since that moment, we have been selling the GBPUSD. As you see, we added more positions, had the breakdown retest of the 1.28340. We added more positions at the breakdown of the 1.28150. We added more position at the 1.27780. We added more positions at the 1.27480 level. And of course, we did add more positions at the breakdown retest of the 1.26850 level. So it was more of selling the GBPUSD throughout this week. Congratulations to everyone who has been part of this profitable journey. Now, with the scenario we had here, we have a very important parameters, which of course we are going to be using to guide our trading activity for today too. And one of these parameter is that descending trend line you can see here, which emphasizes the strong bearish momentum we have been witnessing since the beginning of this week. And of course, you know how we treat our descending trend lines here. They help us to guide our bearish momentum. So as long as price remains below the descending trend line, we have no business buying the GBPUSD. But there is something interesting here that made us to change this perspective. Now, if you remember yesterday what I said, I think I deleted that trend line before the live session. We had a trend line here yesterday, which we said we were going to be using to guide our trading activity, and that if price still remains below the trend line, we continue to look out for selling opportunity, but a breakout retest will definitely welcome buying opportunities. So we saw the breakout of that structure happen, and coupled with the interest rate hike from the Bank of England yesterday, we saw some bullish traction, which actually moved price for with about 40 pips in the bullish direction before some bearish momentum took us out of that position. Because if you had moved your stop loss accordingly, you must have been taken out at a worst case scenario break even at this particular point in time. So I will be deleting this trend line now, as it is no longer needed at this point. Now, like I was saying when I was talking about the Bank of England interest rate decision yesterday, remember we saw an interest rate hike of 25 basis point, which of course is what everyone in the market was expecting, that the Bank of England will increase the interest rate. Now, because of this, we should have been expecting a bullish momentum, as majority, of course, will want to take advantage of a more interest yield on the pound sterling compared to the US dollar, of course, hereby leading into a situation where buying opportunities should start rolling in. But the reason why the bullish traction here appeared to have reduced significantly, I think, is simply because of the NFP data, the non-farm payroll, which is coming up much more later today. And as a result of this, key players in the market are very conscious, risk averse, waiting for clues on what will happen, what the data will come in with to decide what our next line of action. And as a result of this, we have seen that price has been very choppy in the last 24-48 hours now, as we saw price within this range. And in fact, the interest rate decision yesterday still has not yet have any significant impact on this market. Now, going into the New York session today, what is going to be our plans? How do we intend to capitalize on a potential trading opportunity today? Now, remember yesterday we had this level at the 1.27, where we said if price breaks out and retest, we want to be joining bullish momentum. And in fact, this level has been a major determinant of price action in the last 48 hours in this market. Now, yesterday we saw the breakout of this level, and from a technical standpoint, we should expect that a retest of the structure coupled with buy pressure should welcome an uptrend continuation, despite the fact that we are still below the descending trend line we identified earlier. Now, you would agree with me that we are at a critical point in the market where price action, depending on how price action reacts to the 1.2700 level, will determine where price action is likely going to be going today. So I want you to mark these levels out on your chart. That is the key level at the 1.27, where depending on how price action reacts to this level will determine what to do. Now, let us look at how we are going to take advantage of any opportunities around this area. Now, the first thing I want to look at here is a potential bullish momentum. Now, if the buy pressure around the 1.2700 persists, then I want to look out for patterns and structures that will aid the idea of buying. And this could reflect on the chart as reversal patterns. We might see double bottom structures, head and shoulder pattern, whichever case it may be. Then if we start seeing something like that, we have our neckline marked out, then a breakout of the neckline will definitely welcome buying opportunities. And if price continues to climb to the upside, then a breakout of the 1.27480 will welcome more opportunities to buy. And in fact, the 1.27480 shares a beautiful confluence with that descending trend line that has been supporting that bearish momentum since the beginning of the week. And in fact, if price action breaks out of that descending trend line, it will be the first time price will break out of that line since the beginning of the week. And this will be a beautiful signal that the trend line may no longer have the capacity to continue to negate that bullish attempt. And at that case scenario, a breakout retest will welcome more opportunity to buy. And remember, we have more levels like the 1.27780 area where we want to be adding more position to our existing trade. So let's see how the market will play out from this current market structure going forward. Now, if that is not the case here, but instead price drops below the 1.2700 area, remember we are not getting too excited, so we are not having a sell stop order there yet. What we are going to be doing as soon as price break down the 1.27 is to scale down into our lower time frame to look out for signs that buyers are finding it difficult to climb back above the 1.27, and this would reflect on the chart as price retesting the structure, continues selling pressure around this area. Then we can join the bearish momentum to the downside. So please take note of this. The 1.27 is very crucial for us to make any important trading decision for today, and depending on how market participants react to this level will determine how we are going to be trading, buying or selling the GBP USD for today. So I want you to mark that level out, as you will be needing it as a reference point to guide your trading activity for today. So if you have any questions whatsoever regarding what I just explained so far, feel free to let me know in the comment section by typing your inquiries in there. So I will be taking the next 10 to 15 seconds to pause and see if there are any questions, and you can as well use that time to mark out those levels on your chart. All right, so in the absence of no questions, I want to assume we're all on the same page. So I will just run through the last instrument for today. I hope we can use the remaining 6 minutes to finish up on today's trading session. So the next financial asset on our watch list for today is the XAUUSD, popularly known as the gold spot. And of course, you all know by now that this is my favorite asset amongst the assets we've been monitoring since the beginning of the week. And in fact, we had a tremendous experience here this week on the XAUUSD, and we took advantage of some buying opportunity. We took advantage of some selling opportunities as well. And of course, we took advantage of more selling opportunities as we rode the price move to the downside. So let's run through how the week started for us here in this community. So I will zoom right into this area. So this was where we were during the beginning of the week. Remember, we had this signal at the beginning of the week when we saw price started with a very strong bearish momentum, as you will see here, then continued by pressure around this area, led into a situation where we begin to suspect that buyers might likely come in. And coupled with the fact that we saw the sharp rejection of this ascending trend line, remember we had an ascending trend line identified at the beginning of the week, which of course was supposed to be serving as a yardstick to guide our trading activity for the week. So as a result of this observation, we decided to take advantage of a bullish momentum if price breaks out of the $1,956.50 level. And since that moment, we have been buying, maximizing the potential of that bullish move by adding more positions at the breakout of the 1,960. We also added one at the 1,963. We added more at the 1,967, giving us about 4 positions running at that point in time, making us scoop over 200 pips before the bearish momentum began. And I told you that I missed out on that bearish move because I was thinking that that was going to be a retracement of the bullish momentum, as I was looking forward to where the retracement phase will end to join the bullish move. Now, on Tuesday's trading session, we saw our price action fell into the ascending trend line zone. And of course, that level, that zone also shares a confluence with where we bought the gold at the beginning of the week. And because of the memory for buying power around that area, we said we were going to be joining a bullish momentum at that point. And I told us all that for those who are profitable on the XAUUSD so far the week, we could afford to leverage on some of the profit we had made so far to test waters above the 1,956, and of course we had a buy stop order triggered, but unfortunately we were taken out of the buy position. I saw a comment here now. Backdoor says that please can you fix the double audio? Okay, let me see. I think the thing is fine for my monitoring device. I will advise you to restart your app, please, so that you can reset the system and get a better quality, okay? My monitoring devices here is okay, and if anyone says it's still the same, please let me know in the comment section, and I will try to make further adjustment to make things fine, all right? So please let me know in the comment section, please. So we took advantage of more buy positions here as we were stopped out, unfortunately, on that one. But we were also on standby to capitalize on the bearish move too. Remember, we said if price does break down the ascending trend line, retest of structure will welcome selling opportunities, and of course that was exactly what happened. We saw the breakdown, retest, and since that moment we have been selling more of the XAUUSD. Now, until yesterday, now we begin to see signs that price is within a range. Of course, we saw for the last 48 hours, in fact, price has been caught within the range between the 1,938 and the 1,930 to emphasize the level of indecision in this market. And in fact, yesterday I think we had a new chart to help us guide our trading activity for yesterday. So this is what we saw during our live session yesterday. So we have this very simple setup. We have a range where price has been caught within the 1,938 and the 1,933 $1.50 level, and this is a fallout. This is coming after a very, very strong bearish momentum, making this consolidation phase potentially transition to a downtrend continuation. So if you look at the impulsive move that brought us to this point, you will see price has been falling into this range, and if this continues like this, a breakdown will be giving us something like a bearish rectangular pattern to incite a bearish move. And during the New York session yesterday, we had a breakdown of the $1,933.50 level, which of course triggered the sell position. And since yesterday, price action has still really not shown that traction to favor a particular direction at this point in time. So presently we still have a sell position running, which is still currently running with about let's see, about 8 pips in profit at this point. But one thing I can say here is that sellers are still struggling to further gain that momentum. Now, with the situation we have here, how do we intend to position ourselves for today's trading session? Well, the market is still in a limbo right now. There is still an indecision phase right now, and of course we all know why that is. We're expecting a major event today, that is the NFP, and of course when such event is gradually coming near, there is this chance that liquidity will reduce in the market as major key players in the market will withdraw their funds, waiting for clues from the data that will come from the NFP. Now, one of the things I can project here from a technical standpoint is this. You know how we do it whenever we have a range like this. We want to wait patiently for either the breakout of the resistance line to give us buying opportunity or the breakdown of the support line to give us selling opportunities. Now, as long as price remains below the $1,933.50 level, we shall still remain very bearish, where we will look out for more opportunities at the further breakdown retest of the $1,929.50 level. So if price still falls below these levels, we shall feel comfortable in our sell position. However, a breakout of the 1,938 level will welcome an opportunity to buy. Now, if we are going to be buying above the 1,938, that means our sell position will be taken out. And of course, a breakout retest of the structure will give us a confirmation that we are good to buy the XAUUSD. So you would agree with me that we are at a crucial moment in the market right now, where this area here between the 1,938 and the $1,933.50 level is going to be our center of focus for today. Now, depending on how price action reacts to either the resistance line or the support line here will determine if we are going to be buying or selling for today. So let's keep this in mind. Let's mark these levels out on our chart and let's be prepared to capitalize on this potential trading opportunity for today. And always remember that you want to have your stop losses in place as you want to protect your portfolio against any sudden move that can wipe your position out. So it's better that we have a considerable risk amount on our positions than to risk a huge amount and you taking out and you cannot live to trade another day. So it's very important to live to trade another day. So in that regard, risk as minimal as possible. Risk what you can afford to lose on every trade. Risk something that your emotions can handle. So that is that on the XAUUSD for today, and it's on this note I want to call it a day here. But before I draw the curtain, I would like to know if there are any questions whatsoever as regards to my recent illustrations, and I will be taking the next 10 to 15 seconds to see if there are any questions before I close in for today. All right, so in the absence of no question, I'm very glad that we are all on the same page here. So we shall be getting prepared for the New York session. And in fact, I'm very, very confident that we are all well prepared as we are able to simulate all the potential trading opportunities that could likely come in and what to look out for to capitalize on that move when it finally happens. So for today and for this week, we were able to take on 4 financial assets: the USOILSPOT, the USTech100, popularly known as the NASDAQ. We have the XAUUSD, that's the gold spot, and of course we treated the GBPUSD. And in fact, we have been very, very profitable across board on this financial asset. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed here today. And trust me, the more time you spend with us, the better you get to understand how things works, and you will eventually be able to use the information you have gathered here to make your independent decisions on your trading account. So I look forward to seeing more of you anyways. So let's see how this works out. And on this note, I wish you best of luck today and ensure that you have all your positions well secured ahead of the NFP data so that we don't get carried away with unnecessary spikes in price movement. All right. So on this note, I wish you all the best and a wonderful weekend to you all. And I look forward to seeing you again, same time on Monday morning as we take a fresh new perspective to the current market structures. Do have a wonderful weekend and evening, everyone. Bye-bye.